Hello viewers, welcome to my channel. I am Hasham. So in this video, I am going to start the next problem, that is problem number 10. So far 9 problems I have explained in detail regarding how to compute the income from salary, regarding allowances, perquisites, profit in lieu of salary, deductions, everything I have explained. So if you are continuously watching all the earlier videos, definitely you are much confident in attempting the problem on computation of income from salary. So if you have not watched the earlier videos, you cannot be able to understand this. So I suggest you to go to the playlist of my channel, select the subject income tax for the assessment year 21-22. Watch the earlier videos. Be confident on the provisions of Income Tax Act. Then this 10th problem you can easily understand. So before starting the 10th problem, I expect my viewers to have a printout of the problems which are given in the link under my description. So always keep ready. Take the screenshot of the points which I have written on the board, then I'll explain all the points of problem number 10. Come on, see the 10th problem. Mr. Swaminathan, a senior citizen, is working in Jeevan Jyoti Company Limited in Nagpur. Population 21.23 lakhs. First of all, the SSC is a non-government employee. The salary particulars of him are as under. So first of all, I'll draw the format. Mr. Swaminathan, computation of income from salary for the assessment year 21-22. Salary, basic. Basic pay is given 21,400 per month. So 21,400 per month into 12, 2,56,800. Then dearness allowance 12,500 per month enters for retirement benefit. So under allowances, DA 12,500 into 12, 1,50,000. Next comes entertainment allowance, EA 3,000 per month. Actual amount spent is 1,000 per month. For EA, actual amount should never be considered. Ignore the actual amount spent. How much EA he has received? 3,000 per month. So here you should take EA. Entertainment allowance 3,000 per month into 12. 36,000. Ignore the actual amount spent. Then uniform allowance 15,000 per annum. Actual amount spent on clothes for himself 12,000. There is a provision for uniform allowance. According to the provisions of Income Tax Act, uniform allowance is taxable for unspent amount. So actually he received 15,000. How much he has spent on uniform? 12,000. So 15,000 minus 12,000. 3,000 is taxable. So uniform allowance 3,000 taxable. 15,000 minus 12,000. Unspent amount is taxable. Next comes leave encashment for 1 month period. See here, in the last video I have explained you retirement benefits. Leave encashment received during the service period is fully taxable, no exemption. So complete leave encashment for 1 month 28,500 should be taken under the head salary. The first time we are coming across this new point. So leave encashment received during the service period is fully taxable under that salary. If it is received at the time of retirement, then exemption is allowed. Then after that, leave encashment, then pension. Pension from the former employer 5,000 per month and pension from LIC under annuity plan rupees 600 per month. So Income Tax Act says pension is also taxable under the head salary. The difference between salary and pension is during the service period, employee will receive salary. After retirement, the employee may receive pension. So after retirement, pension. So whether salary or pension, both will be considered under the head salary. So this pension received from former employer, 5,000 per month into 12, 60,000, fully taxable. Whereas pension received from LIC under annuity plan, this is taxable under income from other sources. not under income from salary. So here in working note, you should write down the pension received from LIC annuity plan, that is taxable under income from other sources, whereas pension received from former employer, that is taxable under that salary. Next point is, he is provided with the following: rent-free accommodation, rent paid by the employer on this house is 5,500 per month, and the cost of furniture provided for 3 months is 1,20,000. So rent-free accommodation, it is a taxable perquisite for all employees. So here perquisite rent-free accommodation, working note. First of all, the SSC is a non-government employee. SSC is a non-government employee, and accommodation is not owned by the employer, it is hired by the employer. So in that case, least of the following two is the value of the perquisite: actual rent paid by the employer or 15% of salary. Already previous problems we have applied this one. Actual rent paid by the employer or 15% of salary. Now salary means here basic. First of all, we'll calculate salary. Basic salary 2,56,800. Leave encashment. Leave encashment should also be considered as a part of salary because it's the monetary amount given by the employer to the employee. Monetary amount given by the employer to the employee, that is also part of salary. So leave encashment. DA. Dearness allowance is entering for retirement benefit given in the problem. If DA enters for retirement benefit, then only we should take. If DA is not entering, don't take. So DA enters for retirement benefit 1,50,000, take it under salary. EA, entertainment allowance, fully taxable, we have taken. Uniform allowance, the unspent amount 3,000 is taxable. The total of the salary is 4,74,300. This is the salary for calculating RFA, rent-free accommodation. The accommodation is hired by the employer, so the value of the perquisite is least of the following two amounts. The first one is actual rent paid by the employer. In the problem it is given the rent paid by the employer is 5,500 per month. So 5,500 per month into 12, 66,000. Second, 15% of salary. Salary means 4,74,300. So 15% of 4,74,300, 71,145. The lower of these two amount is the value of unfurnished house. The lower is 66,000. So value of rent-free unfurnished accommodation is 66,000. To this we add 10% of cost of furniture. But furniture is provided only for 3 months. It is given in the problem, only for 3 months. So 10% of 1,20,000 into 3 by 12, you will get 3,000. Add up 66,000 plus 3,000. 69,000 is the value of rent-free accommodation. 69,000. Next item, he is provided with free meals for 180 days during office hours through paid vouchers. The cost of each meal is 65 rupees. The Income Tax Act has given the provision. Meals provided by the employer to the employee during the business hours within the business premises is exempted up to rupees 50 per day. Per day 50 rupees meal exempted, tax free. Over 50 rupees it is taxable. So in our problem it is given 65 rupees. So 65 minus 50, 15 rupees. So per day 15 rupees, how many days? 180 days. So 180 into 15, that comes to 2,700 is taxable. Next comes credit card bill paid by the company. Even in the previous problems also we have seen the credit card bills of the employee paid by the employer is a fully taxable perquisite. So credit card bill paid by the company 28,000, fully taxable. The company presented a gift worth rupees 4,500. Even in the previous problems also we came across the gift given by the employer in kind is exempted up to rupees 5,000. The excess is taxable. Up to 5,000 not taxable. So here the gift value is 4,500. That means it is exempted from tax. So in working note you should write down the gift given by the employer to the employee in kind is below 5,000 rupees. So it is fully exempted from tax. Next one is the company sold the following assets on 2nd February 2021. Motor car rupees 3 lakh purchased in April 2019 for 8 lakh and laptop for rupees 5,000 purchased in August 2019 for rupees 1,20,000. So two movable assets are transferred by the employer to the employee. So again, when a movable asset is transferred by the employer and employer to the employee and a benefit arises from the transfer, that benefit is a taxable perquisite in the hands of employee. Now two assets are transferred, one motor car, one laptop. So we have to find out what is the benefit to the employee from getting this motor car and getting the laptop. See here carefully. Motor car sold by the company. According to the provisions of Income Tax Act, depreciation at the rate of 20% on reducing balance method. Depreciation at the rate of 20% on reducing balance method is allowed on calculating the book value of the asset, book value of motor car. So here cost of the car is 8 lakh rupees given in the problem, minus depreciation for the year 2019-20, 2019-2020, because it was purchased in April 2019. April 2019 it was purchased. So 2019 to 2020. So 20% of 8 lakh, it comes to 1,60,000. Deduct 6,40,000. Second year depreciation for the year 2021. Because current previous year is 2020-21. So during 2021, 20% of 6,40,000, 1,28,000. First year depreciation 1,60,000. Second year depreciation 1,28,000. Deduct 5,12,000 is the book value of car at the time of sale. So at the time of sale 5,12,000. At what price the car was sold by the employer? It is sold for 3 lakh. It is given in the problem. The motor car was sold by the company to the employee for rupees 3 lakh. So minus 3 lakh. The benefit which employee gets is 2,12,000. This is the value of the perquisite on motor car. So here you have taken motor car sold by the company 2,12,000. We got the calculations here. Now laptop. Laptop sold by the company, depreciation is at the rate of 40%, not 50%. It was changed. 40% on RBM, reducing balance method. Reducing balance method. The cost of the laptop in August 2019, date is given in the problem, month is given, 1,20,000. It was purchased in August 2019. So 1 year will be completed in August 2020. August 2020, 1 year is completed. So for 1 year depreciation, 40% of 1,20,000 is 48,000. Only for 1 year. Because our current previous year is 2021. The fraction of the year should not be considered. Whole number of year we should consider. Here it was used for 2 years. Motor car was used for 2 years. Because April 2019 to this April 2020, 1 year. Here April 2021, 2 years. But here it is only for 1 year. So 40% of 1,20,000, 48,000. 120 minus 48, 72,000 is the book value of laptop. And it was sold for rupees 5,000, given in the problem. Deduct 5,000, 67,000 is the value of the perquisite on laptop. So here laptop sold by the company 67,000. So next one is nothing. Or compute income from salary for the current assessment year. That's the last line. So now again we'll see from beginning. Basic salary 2,56,800. Leave encashment. Pension from former employer. It is fully taxable under that salary. Allowances DA fully taxable. EA entertainment allowance fully taxable. Remember, year reduction under section 16.2 is not allowed because the SSC is a non-government employee. So year reduction under section 16.2 not allowed. Then uniform allowance, unspent amount is taxable. Then perquisite rent-free accommodation, just now I discussed, free meals up to 50 rupees exempted, over 50 rupees taxable. So 65 rupees is given. 65 minus 50 is 15. So 2,700. Then credit card bill of the employee paid by the employer, fully taxable. Motor car sold by the company, just now I told you, 2,12,000. Laptop sold by the company to the employee, 67,000. Profitability of salary is nil. So in gross income from salary is 9,13,000. From this deductions under section 16, only one deduction, that is standard deduction. We don't have professional tax in this problem, and we don't have year deduction under section 16.2. No year deduction, no professional tax. Only standard deduction is given, least of the following two. Gross income from salary or 50,000. Whichever is less, 50,000. Deduct 8,63,000. 8,63,000 is the income from salary. That's all. So totally 10 problems I have explained on the computation of income from salary. Inshallah, next topic we will take up in the next video.